So Michael, I think one of the key elements to getting to that continuous planning means that if we're planning off of information on a more continuous basis, on a real-time basis, well, we need to make sure that our accounting information is accurate. And the way that we accomplish that is through a continuous accounting process. So instead of the typical accounting process that has a month-end close, and then you've got to wait 5 or 7 days before you can look at the data, and then someone's got to go and update the plan and analyze that, is that by going to a continuous close, we can feel comfortable that the information that we have is accurate. And so what do we do to accomplish that? Well, ultimately, some of the things that we look at doing is changing the way that people look at the accounting information. And so this is where we go and we start looking at cycles as opposed to just GL accounts. And so an example, especially in your guys' case, would be that order to cash cycle. Can you tell me a little bit about what you guys are doing on that order to cash cycle?
So what the order to cash has provided for us and will continue to provide as we build out the process is it's really brought the pacing of invoicing and the revenue recognition at that contract level into the general ledger system. And it allows us to visually see dashboards and monitor in real time where we are pacing and where we are within the project. Again, at a cash level, that would be the invoicing. And then on a revenue level, that's the accrual accounting mentioned earlier.
And so I think as you're kind of stating there is by having a dashboard that's giving you visibility of each individual contracts or even a project and showing you what has been booked and what has been invoiced and what is left to invoice, what has been recognized and what is left to be recognized, you can actually now monitor this on a daily or weekly basis, as opposed to waiting for the general ledger accounts at the end and reconciling a trial balance. And so by following this from a cycle, you're now able to gain that visibility. And we know that if we can see the contract amount, we know it's recognized, we know that everything is in the flow, we no longer need to reconcile those GL accounts the same way that we used to. And so this allows us what we call guardrails to keep that data flowing and accurate, right? And you're doing that on order to cash. You're also looking to enhance that around the purchasing process because you guys are doing a lot of ad buys out there. That's ultimately going to allow you guys the visibility to what was my budget for ad buys? What have I committed to buy? There is no bill for it yet, but we've committed to buy it. So we don't want to keep making commitments above our budget and ultimately eating up our margin. So gaining visibility into those commitments is ultimately going to help you from a profitability standpoint on your ad buys. Is that accurate, Michael?
Absolutely. And in that example, we are again focusing on those two key areas of accrual and cash. So it's so important in the industry to monitoring those external costs or those flow through costs and sticking to a budget. And if you don't have that information in front of you, if you don't understand what your commitments are, what we've spent to date, or what we've recognized to date, again, you're in a very reactive state. And what this is allowing us to do is really stay on top of the project, manage it to a budget, and plan this thing to the end. Also, it allows us to thoroughly communicate this back to any non-financial folks to really help it align with them as they are, on the project management side.
And I think that's a good point that you bring up is this information could be provided back down to non-financial people. So I like to call it that we've taken operational data, converted it to financial information, and presented it back down to non-financial people for data that they can use in an operational way. And again, this same concept ultimately then feeds your planning system so that you can then forecast what is left on your backlog on a continuous basis, what is left from a commitment, and when do you expect you're going to have to pay for that in a cash basis. And so all of that ultimately can roll in to your project, into your forecast at a project level, and then ultimately can be scaled up to the total company level. And that gives you your total visibility of your inflows and outflows, right? And because you focused on an order to cash and a procure to pay, you've accomplished and managed the majority of your business cycle just by doing those two elements and simplified that accounting process and eliminated the need to do your traditional month-end close process.